All right, welcome back here. This is Daryl Martin with the Diagnostic Trading Hour. It's nice to be back here, and I hope everybody had a great holiday time. I spent a lot of time just getting away, hanging out with family, and making sure I was able to even dive into, reviewing my plan for the year and tightening up some of my strategies as well. And anyways, just glad to be back. All right, let's check out where the markets are at. They are flying today. We got the S&P is up 34 points. The Russell is up 18. Dow up 300 points on the day. So some big moves, to say the least, right? And let's just look at those and pull those charts up. And looking over here at the S&P, let me check this out because that's some big moves. I've been just going over some stuff with some traders this morning, but we had this massive pop, and things were flying. So we're going to dive a little bit deeper into that as the show goes on. We'll pull up some charts and look at everything. And let's look at we got gold right now is currently just pretty flat, up 0.7 right now overall. And looking at some of the other markets, we got silver is down about 0.75%. And we got corn is down $1.75. We got soybeans down 5, almost 6 points on the day. Pound dollar currently off just a few pips, down 3 pips. Euro dollar down 25. Had some massive moves, making some new lows. We got the euro pound right now is down 18. Dollar franc is up 24. Dollar yen's up 39, and the euro yen is up 16 on the day. Aussie yen currently up 93. With the Aussie dollar up 43 pips. We got bonds are feeling definitely some heat. They're down right now. Yield dropping on down nearly 1%. Some massive moves in the bonds. Dollar index is currently up about 1/3%. Oil is not doing as much today. Oil has been a crazy ride, awesome instrument to trade. It has been just insane. But as you can see today, the action is in the indices and the bond markets there. And but just just a few cents up right now on oil at the moment. Pound yen, as always, one of my favorite FX pairs, 73 pips up, positive right now. Okay, so with all that, let's check out what's going on. Again, I want to wish everybody a happy new year and hope you all had a great time. But lots of volatility. We had that massive volatility on euro dollar, just plunging down like 140 pips on Monday night to set the market off right. Have a great Monday. Oil going crazy on Tuesday. So we got to see some big moves on the indices Monday and Tuesday. Now seeing the indices moving again, huge today. And which makes me always want to go over and check out the VIX. So let me open up a VIX chart for you. I'll pull it up on the screen. We'll check it out and dive in. I just want to pull this one chart off. There we go. Okay, so let's see. That's not sharing yet. Give me 1 second. All right, pull up. Got Thinkorswim, got NinjaTrader, got eSignal. I mean, there's a lot of great platforms out there you can check out. But looking on over at the VIX and seeing the VIX sort of pulling down right now as the market obviously is running up. So just a massive drop in the VIX. We were at 19. We're down at 17 right now on the VIX. It dropped down, sort of staying down there. And I'm not making new lows at the moment, but just gapped on down. Obviously, not having that full reading all night long there, at least on the VIX, index. And that's going to drop the cost of your options. Benefit, what does that mean? What do I mean drop the cost of your options? Well, options are priced in implied volatility, okay? And that's the biggest thing that impacts the price of an option. So if you're trading, binary options or call options, put options, or Nadex spread options, then they're going to get cheaper in the sense of the premium will be less. Makes it easier to do some of those out-of-the-money trades a little bit closer with that lower IV, okay? Anyway, so always keep an eye on the VIX. Know about that. Know, hey, when volatility drops, easier to get, cheaper out of the money options. When it's up, easier to get in the money options further away. So, sell high volatility, buy low volatility. I wouldn't exactly call this volatility low still, but it's, definitely low in comparison to where we've been recently. We got all the way up to like 22 there on Tuesday. Let's back up. Let's look at a daily chart, a little bit better perspective on things. And we were back, we were down around 10, 11 earlier in the year, But right now we're still up at 17, but we just had a massive drop, and it just like it wants to fly up. I mean, you read every article saying the market's going to crash. Who knows anymore? Who cares? You know, just follow the chart. Don't trade it to think. Don't be a speculator in the sense of I have an opinion. Trade what you see. Follow the chart. Let the chart tell you what to do, and go from there. Let's see here. Pound dollar. Pulling that on up and looking at it. Let me go over. And moving on down towards that 1.51 handle, actually, just sort of not backing off of it, drop below it a little bit, 1.5034. It's been a big area for the pound dollar to get down to, and to see it actually moving on down to that today and breaking through it, and sort of looks like it's holding that handle there at 1.510. We're like sitting right, just oscillating around it. Here in a little bit, what I'll do is I'll pull up a chart. We'll go through and we'll dive in to deviation level moves on some of these things, but I mean, it's been pretty wild, and I hope you've been taking advantage of it. So euro dollar breaking fresh 9.5 year lows. So reported by Scotiabank there, and just keeps getting plummeted, going to par, and we'll see if it makes it down there. I called par about a year and a half ago. I'm like, I think it's going down to 1. And I was like, with the printing that they're going to do, and they're not ever going to back down, and everybody looked at me and they said I was nuts. Of course, not timing. I wasn't trying to go, hey, just go short and hold on forever. Wasn't so much calling a trade, but just looking at, I mean, it's just plummeting down, and I mean, we've had a nice little bump back up there, but that's to be expected. And I mean, it doesn't have too much further to go compared to how far it fell, but we'll see. But anyways, it doesn't matter how far down it goes, how far up it goes, as long as you get to ride it along the way, in whichever direction that may be. We got Wall Street, rallying going on, ECB, like all the little announcements coming out. We got to talk about the news. We'll go into that. We got natural gas coming out with the oil inventory reports and everything. So we'll go into that for you as well. And, oil's been just a big, interesting topic, with everything that's going on. And of course, that's just spilling right over into natural gas. And now that I got something up that I want to look at, we can go in and we can pull up some of the new stuff specifically, but let's go in and pull up. Let's see here. I give a look at a euro dollar chart just on this move. We'll also go back in. We'll look at some of the other moves. And right over here, give me 1 minute. Gotta get back in the swing of things, right? And then let's pull up. I got a TFNN template to make it a little bit easier for you to see and read the chart, and pull it up right here. There we go. All right. So as that loads up, we'll dive into a couple other topics. But again, this euro dollar having those massive moves starting off the week, and it really just set itself up for just a great drop. Today, we actually already fell down a deviation move. As you can see right there on euro dollar, it came on down and moved on over here to one deviation, 1.758, bounced right off of it. I mean, these deviations, just if you're not using them, you're missing out on an objective way to look at how far the market is going to move on a daily basis. It's not that it doesn't go past them sometimes, but that's the exception, not the rule. And it's basically just based on statistics. It's not a standard deviation model. It's not based on yesterday's performance. It's based on current implied volatility. And based on the IV that we had for today, we said the market will move. If it moves down, a deviation move down move would be 1.758. It moved right down to that. We got a low of 1.75 at 3. Just 5 ticks off of deviation before it bounced right off of it. Yesterday, same thing. We're going in saying, hey, we'll think it moved down to 1.807. Moved down to a low of 1.801. I mean, so just right off of that, bounces right back up. Day before that. I mean, this is this week, this crazy week that we've had. Okay. Said moved down to 1.854. It moved down to 1.849. So just a few ticks off of that one deviation down move. And even over here, if we go into this massive drop that happened on the gap off Sunday, Monday, came on down. We're expecting to move down to 1.918. Now we did get that big push down a little bit further. Right here down to 1.878 where it had that gap, but where did it pop right back up to? Like right back up to one deviation. 1.918, oscillated around there, tried to break through it, couldn't, came right back up and just literally hovered right around a one deviation move of 1.918. That was with the massive moves we've had this week. the implied volatility telling us. It's not that it's some magical thing. It's not that it's some perfect formula. It's what the market is telling us. Okay? And what do I mean by that? Well, like the VIX. The VIX is implied volatility. It's the expected movement built in. And so that expected movement is built into an option. That's why often you can look at like a straddle, and the expectation is if a straddle costs, let's just say, $5 on the call and $5 on the put, then the expectation is by the time of expiration that market will move up or down 10 points. Okay, so the implied volatility built into the option price is telling you how far you should expect the market to move in a given time, and how far everybody else who's putting their money where their mouth is expects the market to move. And that's why we use these deviation levels. Again, they're published inside the scanner. You can check them out. Right now, we put them up every day around 8:15, 8:30 Eastern time every night for the next day. So it's not like we just called them out. I mean, we had them last night when the market was floating right over here. We set down to 1.758. Goes right down to it. How can that help you? It's not telling you direction, okay? But if you're short, well, now you have something to tell you how far down it could go. Where do I definitely need to tighten my stops? Do I want to keep adding on to my short, especially when watch it come down to this level? And watch what happens. It just bounces, and I think what it does, they go down and push a little bit further just to get everybody who thinks that it's going to keep going, grab all of their entries, and then boom, pops right back up. So this is where to chill out and back off on these markets. There are days where it is going to exceed that, okay? So if you're trailing a stop, then you can use it. If it blows through it, you got some volume backing that up, you can check that out as well. And so let's look at some of the indices along with it. That was, again, of course, euro, dollar. And we'll pull those up when we get back right after this. Stay right there. All right, folks, going back here to the Diagnostic Trading Hour, going over to the S&P. S&P moving on up. Today is a day where, like I said, it can exceed. It went on up. It went to one deviation, slowed down a little bit, backed off, popped up to 1.5. And we just got a little bit more right there. But notice what happened. I want you to check this out. Just something I always like to point out to help you, read the markets. Diagnostic trading, diagnostic show here. Going on up, we got strong volume, pushing, strong volume. All of a sudden, volume backs off. See this? I mean, it backed off here at one deviation, but then we got another push, boom. But then it backed off again. And that's where we see just a lot of nothing going on. When that volume dies down and the traders are walking away, getting off the floor, made their money for the day, they're done, getting out of the way. Just learn how to pay attention to, this isn't just about expected volume, just looking at the pattern of the volume when it drops. And I mean, if you think about this, it goes here, it goes down, and it's just staying down. That's before the market took this, pullback right here, full 5, 6, 7 points where it's at. So, I mean, you saw the volume drop happen first. Even right here, we go up, that little volume drop happens. Okay, so tighten up your stops here if you haven't already. Then it moves on up, and then that volume drops off. Definitely be tightening up your stops. So did it come on back up? Of course it did. That always happens that way, right? But again, big volume, look what happens again. Volume drops off. So now if it does continue, it's going to be more of a drift than a trend. And meaning like trend is like, boom, 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 it's going. The drift trend that's the little harder one. That's the, it's just going to oscillate on you. It may keep going. And you can make some nice money on drift, okay? But just be aware of what it is, that it's also harder to trade at the same time. Okay. Let's see here. Going in and looking at where we're at. Even yesterday, we go right in on the 7th, and we're up to a full deviation move again on S&P. So just moving right on up there. Comes out. Really took off last night. The move we saw. I mean, we got a nice move, but I mean, look at this. This is like 0.7 right here on the news from last night. So we can go back. We can take a little review at that. Really flat and choppy. This was a tough part yesterday if you're trading it in the afternoon. I mean, it just bounced. I mean, it was great for scalping. I mean, you could just scalp the crap out of that thing back and forth. But, morning was like a little bit chop, ran up, a little bit chop. That was, I mean, it was a tough day yesterday on a lot of the different markets. Monday, Tuesday were great. Today, great day. Yesterday, it's a little bit more challenging. I saw some traders that were, did well. I saw some that are like, these are the days to sit on your hands. I know a couple traders that they were just looking at how it was chopping in the morning. They just said, you know what, this is the day I'm going to go out. And that's not a bad thing to do. So don't be afraid to walk away. And one trader, Lori, said this morning, she's like, on certain days, I just decide to go shopping and spend my money there instead of in the markets. And that's wise, and it's a lot more fun, too. At least you walk away with something. You may be out some money, but you got something in your hands. So, if you see it's just chopping on you and it's not your day, walk away. But you see the market's moving, you're getting some trends, you can start taking advantage of that and going. Like this morning, it took off, got a nice trend back down, flipped on back around, started trending back up. Makes me just want to look at. Let's put a little trend marker on there. Sort of see how it's capturing it. And yeah, so we got the trend up, we got the little flat line there, but then also we started trending right back up. So just nice trend here, and pretty much after the market opened. So standard hours to look for that movement, and we got it right out of the gate. So anyway, just great moves. This is the time to trade. But it's funny, I've seen some traders literally, there's another down to one deviation. That was Tuesday. I've seen traders go out. These markets are too volatile for me. I'm just going to come back when they're slower. I'm like, you don't get it, do you? Like, this is where the money is. The volatility, it's where the market moves. You have to have your risk management tight, okay? So you have some tight risk management, But, I mean, it's, get in. If it goes against you, get out. Let it turn around. Get back in. And, take a couple $100, $200 losses, but then go for those nice big profits when the market's flying 10, 20, 30 points in your favor. And let's go over here and look at, we got this was over here on Monday. It moved down one deviation, hesitated, pulled back down to 1.5, so a little bit exceeding, not normal there, but it did pull all down to 1.5, but pulled right back up to one deviation to end the day out. So just want to point out, one of the things you may want to look at this year, if you haven't, is looking at implied volatility-based deviation levels. Like I said, we publish them every night right there in the scanner. And one of the most powerful things that I use, period, in trading. And it gives me an idea on expected moves. And it will help you out a lot. All right. Stay there. We'll be back right after this break. All right, folks, come on back here to the Diagnostic Trading Hour. So we've just been walking through some of these moves. We got some big moves, like I said, over on pound dollar, pound yen. Love trading pound dollar, and pound yen is my favorite FX pair. And dollar yen probably. So those three really being in the top three. Pound yen being the top one, then dollar yen, then probably pound dollar. But I got some nice moves going on here today in the pound dollar. It's just been amazing how far these have all been moving down with all of their QE going, all our QE backing off. But we'll see what happens with our QE. I mean, they got all these little, things coming out now and then. And we never know what little announcement they'll make next if we get crashes. But when we get 300-point up days, they don't have to do anything. So, got the plunge protection team or whatever it's called out there working for us, right? So at least they think they're working for us, I guess. But okay, so pulling up pound yen, and then we're going to go into a few of the news trades and knock that out for you as well. But one of the things that I wanted to go through that I think is pretty important, if you haven't been checking them out before we dive into news, wrapping up with that, is check out these 5-minute binary contracts. It sounds insane. When I first was told about them, before they ever came out, like, what do you think about this? And honestly, I said, I think it's a bad idea. And I really wasn't for it. And but now I can't get enough of them. They're addictive. And you hop in there, and I mean, they're rocking it. You go in there, we're trying to trade day and night. You get 12 different trading opportunities on 4 different markets every hour, starting at 6 p.m. and going to 4 p.m. the next day. And basically just, looking at 3-tick charts and just following the trends. They move extremely fast. That's probably one of the number one reasons why I like them so much, is how fast the price actually moves. With the price moving so fast, you can go in at 20, and I mean, literally, you just need the market to wiggle, okay, to go in and basically make a 1-to-1 on a trade. So that really is what's getting down to why I like them so much. I know traders that trade at the monies at night a little bit more, just because it's harder to get sometimes those moves without some decent volume going on at night. But a lot of out of the monies during the day. And then they're also going in, and they're, some traders like the in the monies. I'm not as big on the in the monies, but I know traders that literally trade them constantly. They're like, hey, if it's going long, I'm going long. I go with it. And they're extremely happy with it. So it's really, I mean, you can find what's going to work for your trading style. You got to sit back, be patient, let it do its thing, and let it work out. But I mean, they move fast, got the out of the money. You go for 20 bucks. Big thing, go in, take that profit. Okay, that's huge. Gotta take your profit if you're going to take these contracts. Don't hold them to expiration. If you do, sort of beating the whole point of trading them. And let's see, I'll go here. I'll show you to you on the binary scanner. And let's see right there. Go in. We can bring this down. We can go literally just at the 5 minutes if we want to. Okay. And I mean, right here. So we got you can turn them on the Aussie dollar. You can turn them on the euro dollar. You can turn them on the pound dollar. You can turn them on the dollar yen. And again, they move extremely fast. So like if you thought the market was going up on pound dollar, you may buy this for 25 and sell it for 45 or 50 bucks. And just put that. And the big thing, a couple of the tips I've been giving people is, when you put the order in, put it in, but then immediately put in your take profit. Don't wait till it gets to 50 bucks. Put it in right away. If you wait, it's going to be too slow. Okay? Because they move really fast. I mean, this thing literally could go, I mean, just a couple ticks of movement. That trade could go from 20 to 50 in just a couple ticks. All right? So understanding that concept, that it doesn't take much at all for it to fly, should let you know that it also doesn't take much for it to fly back against you, okay? And you can go in, I mean, you risk 25 bucks. It's a capped risk. You don't have to have a stop loss. Oscillations, I mean, now it's at 12.50. You want to buy 12.50, sell back at 25, okay? So, I mean, they can just really oscillate. And this goes into expiration. Now we see where it goes and where it expires and all that here in the last minute. But, play with them, demo them, demo. Did I say demo? You need to demo the trades. How do you need to get it down first. And if you can't make money in demo, you're not going to make it in live. Just because you can make it in demo doesn't mean you can make it in live. But if you can't make it in demo, it's pretty hard to make it in live too. Okay? Hop on over to tfnn.com. Click on the Nadex banner on the right side of the page. Once you do that, go over to Demo Trading Platform. Click on Demo Trading Platform, and if you're in the U.S., Canada, U.S. territories, or Mexico, you're eligible to open an account. Go ahead and fill in your username, first name, last name, phone number, and email address. Click Apply for Demo. They'll send you an email. You'll be able to log in right away. So you go over here. You can log in, and let's see here. So if I go to my demo account, and there we go. Log in. They'll put $25,000 of funding money in the account that you can trade with. Also, of course, you can upgrade to live right inside that now. It takes you directly to opening the account. It takes about 5 minutes to open a live account. Currently, it's only $100 to fund a live account, I believe. I don't know if they've raised that amount, but obviously, you're probably going to want to put more than $100 in, but that's just a minimum funding requirement. And but if you fund it with the minimum amount or more, and you make one trade or more, you can email customer service at nadex.com or call them, and they'll extend out your live or your demo for a year. So sort of if you want to have that, instead of having the demo where it expires and you have to create a new one and lose your demo stuff and all that other stuff, you can just go in and just fund an account for $100, place one trade. I mean, it could be a $3 trade, it could be a $3,000 trade, whatever you want to do. But then just let them know so they can extend that demo out, so that way you can test out this stuff. I mean, it amazes me how many people are like, oh, I don't want to do, demo. It's like, well, then you want to pay for really expensive lessons. Like, just go in here and play. So, and I'm not saying don't take it seriously. I'm just saying don't get all caught up in the fact that it has to be live for you to learn. Learn how to use the platform, learn how the contract works, learn how it moves, and dive into it. But we got, like I said, got the euro, the pound, the US yen. All of them are right over here. You can see them on the left side. Or if you're inside the scanner, you can see all four of them without having to click. You can see all four, all of the markets and all the contracts that are currently trading available for you instantly. So whether you're new or whether you're experienced, I would suggest that you do demo them, get a handle on them. But I mean, it's a lot easier to get a handle on them because you're not waiting like an hour for a trade to expire, or 2 hours, or a day. I mean, you're getting 12 times an hour to start learning how to use them. So you get a lot of opportunities to go in and check it out. But, I mean, that also means more opportunity to win and, of course, more to lose. So that's why it's wise to start out with demo on that. But they will keep you busy all day, or if you just have an hour or so to trade, you can sit down, hour in the morning, lunch break, evening, after kids go to bed, before you go to bed. You know, I mean, things like that. I mean, you can literally pick whatever time you want to trade them because they're always there and they're always expiring in like 5 minutes. So, you know, if you're trading flatter times, you might want to choose in the money contracts. If you're choosing more volatile times, you might want to choose the out of the monies when there's a little bit of movement going on. So you can just go in and scalp the thing and buy it, you know, 15 and sell it at, you know, 30 or whatever. And just going in for 15, 20, $30 a contract and just trying to repeat, rinse and repeat and, you know, make your money in size, not necessarily quantity. But you have plenty of opportunities. I mean, not quantity of trades, but size of trades. But you'll have plenty of opportunities to be able to trade them. So if you haven't checked them out, check them out. At first I was like, no, but after seeing the speed, I'm like, why wait 40 minutes for the thing to move when I can have it move in 40 seconds, you know? And again, less things happening that you know, it's easier to predict the shorter time frame than it is the longer time frame. All right, so we got that up. We got those done. One thing we wanted to go through was we wanted to hop in and talk about the news for the week and sort of what's come out. We'll dive into next week's news on the new show. But this week we had a variety of trades come out that I did lay them all out for you, but just to make sure you got them there. Monday we had that pound construction PMI. That was released, and we'll go back and we'll look over some of these. We also had the Aussie trade balance, pound services PMI, not major news reports, but with all the Greece stuff and everything else and the QE leaks and all that ideas, there's just caused a lot of volatility, oil going on. We had ISM come out on the 6th, and we had various CPI reports and unemployment rate coming out of Europe on Tuesday night. Yesterday, we had the ADP NFP report came on out and causing, you know, but it wasn't massive. Usually isn't massive. Notice how we do a iron condor on that trade. We had CAD trade balance come on out, and let's see here, CAD IV PMI came out a little bit different on Wednesday. We also had Aussie building approvals and Euro retail sales this morning. Had a little you know, volatility with pound there with the bank rate coming on out. I think we had a pound chart up a second. We had a pound yen. Let's pull pound dollar. Look at that one real quick. Can analyze that. And let's see here. Had the credit conditions, the bank rate, the asset purchase facilities, the MPC rate statement. I love this report most whenever it comes out with the EU. But basically, pretty, you know, we don't usually get a lot of movement on it either way. And 6 to 8. So if we go here, we track the trade starting at 6 and taking it over to 8 o'clock. We got a mere 13 pips. We had an expectation on the trade to be 30 pips or less. The less is good. That means that we made 15 pips on if you got at least 30 pips in on the trade. So it worked out well. Of course, had the rate statement and all that stuff coming out. U.S. unemployment claims came out this morning. That report, just to update you on it. U.S. unemployment claims came in at 294,000 on an expectation of 291,000. And then we had a weekly natural gas report come out. Let's go ahead and check out our natural gas real quick and see what kind of movement we got on that. There we go. Oh, let me update. I want to make sure one thing is updated because I may not have done it yet. 1 second. I'll pull it up, put that chart up for you. And we'll have that. Just give me a minute. There we go. Okay. All right, so pull the natural gas over here. Got that updated to make sure we have the right contract on there. And we're usually looking, a lot of times it'll do volume spikes and things of that sort, so we'll pull that up and check it out. Okay, so right over here, the report came out at 10:30, and which is the normal time it comes out, but it came out here on Thursday, and natural gas storage came in at 131 billion British thermal units, declined compared to 120 British thermal units that was expected. And what does that mean for us on the volume spikes and on the expected movements? Let's see here. So we got that, and that 1 second. I'll let this chart load up. We'll check it out. And this is really my preferred time to look at volume spikes. So yeah, basically volume spikes saying, hey, check out, look for a short. It did drop on down for us. Then it said look for a long for it to go on back up. It's a lot of noise on that chart. Now it's a little bit hard to read. But yeah, so we got volume spike sells and buys both going on. And it is obviously the volume right there total. So what about the expected range movement with that? To go on the expected range to show how far did it move in comparison to our expectations. A little bit lower than normal during the release, a little bit higher after the release. So, but still, I mean, stayed well with, stayed within the range during the expectation. So you could have done a straddle if you could have got it cheap enough. More likely, better off to pull off an iron condor as usual. And we usually see like that volatility in that first 30 minutes, and we see another follow-up right there at about 12, and then it flattens out, doing the same thing right now. Once that flatten out happens, that's where you go in and try to kill it on the iron condors into the end of the day. Sometimes you can get some really expensive ones if there's enough IV in there. They're just ridiculously expensive on natural gas going into the end of the day. So something just to check out that's buying the lower spreads and selling the upper spreads over on Nadex. As far as tonight, we got Aussie retail sales coming on up at 7:30. So that's a trade you can check out. You could look at it going into an iron condor. Usually the movement is less than 30 ticks off the Aussie retail report that comes out at 7:30 Eastern time. You could buy a lower Nadex spread, basically a Nadex spread that has the ceiling like right at or below the market, and then sell an upper spread, meaning that the floor of the spread is right at or above the market, and doing a neutral trade, expecting it to stay inside that 30-tick range and looking for an 11 o'clock expiration. And that would be the trade setup for this evening on Aussie retail sales. Let's see here. Yeah, we got to let me get rid of one thing. So this trade works when we don't have NFP, but we got NFP Friday, so which is awesome. I love NFP Fridays. It's one of my favorite days of the month. And usually a lot of IV built in. If it's really heavy, then I'm going to go in and grab some iron condors. If it's not, then I'm going to go in and I'm going to look for some straddles. So what do we look at? What is that plan? You need to have that ready. That's the sort of the main piece I want to get out to you today. And let me see if I can find one piece I want to look at for you. We'll cover it. We'll wrap it up on the NFP and how to trade it. We'll get back right after this break. All right, folks, we'll come on back here to the Diagnostic Trading Hour. And we're looking at this one last piece just to cover this for you, NFP Friday. Let's see here, going in on NFP Friday, U.S. unemployment rate coming on out. And what are the expected moves that we have? We have the Aussie dollar. We're expecting to move 60 pips. Euro dollar expecting to move 100. Pound dollar expecting to move 100 pips. Dollar CAD 75. Dollar franc 92. And dollar yen 80. So with that, we usually go for a little bit less. So an Aussie dollar, I'm usually going to go for 50 pips on an iron condor. Euro dollar, usually go for about 60. Pound dollar, going to go for about 70 pips. Dollar CAD, going to go for about 60. Dollar franc, going to go for about 60 as well. And dollar yen, about 60 pips. Why? Because they move that far, but they usually pull back. So what this does, it gives you an idea of, one, if you can't get that much, then what to look at, and also to not be surprised when it does pull a little bit further out. Okay, but two, if you get them really cheap, you know what the expected moves usually are on that report. And it's one of those things, demo trade it first, learn how to do it, walk through it, learn how to do the iron condors, put the pieces together. Straddles are an option if they're really cheap. Okay, so but just put those different pieces together. And I mean, I even talk about the more advanced, once you get this down and you've mastered it, usually the most volatile ones are pound CAD and Euro CAD. We got quite a few CAD reports coming out at the exact same time that can help add to that volatility. So you can check those out. They that's a little bit different to do a straddle on those. You got to buy Euro dollar upper spread, and basically you got to do a straddle on Euro dollar, and you got to do a straddle on dollar CAD. Because when you buy the Euro dollar and buy the dollar CAD, you're buying Euro CAD. When you sell the Euro dollar and sell the US CAD, you're selling Euro CAD. So if you buy the upper spreads and you sell the lower spreads, basically do a straddle on both. That ends up being a synthetic straddle. And so you can check that out. Usually, like I said, a lot of volatility in those pairs, Euro dollar and pound CAD, whenever the NFP comes out. And more often than not, we've seen that work out really well. Last time it moved a little bit, didn't move near as far, it's more like 60 pips. It wasn't near as far. But a lot of times I've seen over the past year, looking to, I look at the stats over 1 year, 2 year, 5 years, that it's really been picking up and giving us some nice big moves. That really is the main way to look at it. You can, as far as straddling, even 9-hour condors, I mean, you can look at as early as 9 o'clock, 10 o'clock, because the release is coming out like 8:15, 8:30, all the different reports that are coming out. But 3 o'clock you can even check out. Now 3 o'clock I like even more for the straddles, because if I can get them cheap enough, we get those big moves. Sometimes they just keep going and going and going. And I've found sometimes I can literally get a 3 o'clock for a few dollars more than a 10 o'clock, and it was well worth it. So anyway, something to check out, to look at tomorrow morning with the NFP. If nothing else, you better be aware that NFP is coming out, so that way you're trading it properly whenever you do these reports. It's coming out at 8:30. Okay, so I don't care what you're trading, it's gonna get moved by the NFP report. So I just don't want you to get taken out because you don't know what's coming. So either you get out of the way, or you learn how to hedge off, or you tighten stops, or you learn how to take advantage of it. But just don't ignore the fact that the bus is coming down the street when you're about to cross the street, when you're about to get into a trade. Okay, make sure that is on your schedule, that you remember it, and check out what happened, where the market go, how did it play out. Even if you're hopping on after, maybe you don't get started until 9:30 anyway. So you let it play out, let it do its thing, go back, look at it, see what the results were, see where the sentiment is, see where things are going on. I mean, at the end of the day, you still got to follow the charts, but NFP a lot of times you're going to get all that volatility, you get a few hours, and you get a dead day. So just be aware of that. Also, we do have an FOMC member speaking at 1:20 tomorrow. Not a major speech, but still one that can have a little bit of an impact. All right, y'all have a great day, and I will talk to you later.